Hello, here we go. Chapter 11, preparing a worksheet for a merchandise company. Okay, we've already gone through a lot of the information already, but now what we're going to do is we're going to be looking at, again, inventory a little bit more detailed. Remember the insurance expired. Remember, we're going to go back to depreciation, so you're going to need to remember that as well, and salaries. And then we're going to look at preparing a worksheet for a merchandise company. So what we're going to do is we're going to be looking at, again, the adjustments for inventory under the periodic system. That means that we're going to be looking at the beginning inventory, what you've purchased stuff, which is the starting inventory. And then, of course, for the period that never changes during, okay, for example, all purchases that are made during that period are recorded in the purchases account. And then, of course, we're going to be looking at the ending inventory. So as we saw almost 4 weeks ago, where we had things such as the merchandise that we purchased, then we would have the verbiage of what we have on hand, and then we'd have to go ahead and subtract what we had on hand versus from the beginning to find out how much was sold. We're going to go back to that, okay? So we're looking at the physical account of the merchandise, actually taking a physical inventory, and again making sure that we know what the inventory is. So under the periodic system, let's say that we went ahead and we look at the information. We went ahead and we purchased all of this information that we have here, and we're looking at this, which is the ending inventory sheet. We have 20 of the ladies' jackets, 10 of the men's hats, 90 of the men's shirts, and 100 of the ladies' blouses. We have the unit cost for each one under the dollar amount. We have the total because we've multiplied the amount by the unit cost each one. And then we have the ending inventory of how much we have for Art's wholesale company, how much he has total. We still have to know how much individually, because in accounting and in inventory, we're going to be looking at all the inventory that we have as a whole, which is considered an asset, and each individual amount that we've got, okay? So when we're doing adjusting to the merchandise inventory, we have two first steps, okay? We look at the balances, and we look at the beginning inventory. And then, of course, we have our adjustments of the income summary. We're looking at how much we have, how much we sold, how much was revenue, and how much was ending inventory at the end, okay? So what we're going to do, again, is to remove the beginning inventory and add the ending inventory. So notice, we must know what the beginning inventory is, okay? So that we can begin to know what the inventory is. So we have 19,000. The adjustment again is 19,000. Then we have 4,000 as our adjusting balance. Okay? Notice the adjustment that we're making. Which means that we have the beginning inventory of 19,000. Okay? We went ahead and we had the net cost of purchases. How much did it cost us to purchase all of this? Then we have what is called the cost of goods sold, what we have that are available for sale, our inventory, and then our cost of goods sold, and then, of course, how much we have. We have to include the freight in as well. And then we look at the beginning, again, the ending inventory to determine how much money we actually made. Okay? So this is the beginning of the inventory that we have here, 90,000. Plus the net cost. It cost us $50,000 just to either advertise, make signs, freight in, freight out on each one, the amount of money that we still owe, whatever the case may be. So we're looking at also our purchases, whether we went ahead and provided discounts, how much we had as far as returns, how much we had as far as freight in. So this is where it shows us the amount right here, okay? because this is our inventory that we have. We go back, we look at all of this, okay? And we're saying now that our ending is only 4,000. So that means we've sold some. We've sold a lot, okay? Well, we sold a lot, but we did also sell it at a discount, and we also sold it as a, we also got some that we had to return, and how much it costs us when we're going to return those as well. Okay, so when we're doing this, we're looking at the balance sheet and income statement and the impact that we have on this. We begin with the, of course, the beginning inventory. And then, of course, we're looking at the inventory that we have here, which is part of the cost of goods sold. And then we have your inventory, which is not part of the cost of goods sold. So obviously then, the only amount that we're looking at as far as the cost of goods, putting on the cost of goods sold, is going to be the subtraction of this amount, the ending, excuse me, against the beginning, which of course is going to be 15,000 that we went ahead and we sold. But again, we have to include the freight, everything that we have that we did to start a new month. Okay? Don't worry, you're going to be able to understand this a little bit more when we go through our worksheet. This is just a summary. Okay? We're also going to be looking at revenue, the unearned revenue, and that's things such as rent received in advance. Okay? If somebody's renting a building from you and you've got all that money here, it's an asset, but it's also considered a but it can be seen as an asset, but it's actually in a liability account because it's unearned. You haven't earned it yet. It's what people still owe you. It represents the amount collected for rent before renting the space, and it also could be the fact that you could be the one renting the space as well. Okay. It's earned as one fulfills a portion of the rental agreement, meaning once you start paying on it, however you're supposed to pay on it on a monthly basis, on a weekly basis, on a bi-weekly basis, whatever the case may be, that's what we're looking at. Then, of course, you're going to be looking at the adjustments for unearned revenue. For example, if a company is subletting a portion of its space to a company, for example, believe me, this happens all the time. If you look at Walmart, you have your shelves, right? You have your shelves of all the stuff. The rental space for products, the best rental space is going to be those that are at eye view. Normal person's eye view, not mine because I'm a little short. But anyway, at eye view, so that everybody can go ahead and see them and catch the eye, right? So that's going to cost a little bit of rental space for, let's say if you're looking at pain relievers, Aleve, Bear, aspirin, Tylenol, all those are going to want to have the same rental space because they want to be able to, their brand names, they want to be able to sell quickly. So you sublease and you say, okay, if you want to be placed on this shelf, this is how much it's going to cost you. So again, a portion of the space that you're going to go ahead and rent that's coming in. So it's renting its space. It's $200 per month, and it receives $600 for 3 months rent paid in advance. Remember, you've got the cash already, but you're putting it in unearned rent. The adjustment when the rental income is earned, then of course you decrease the amount of money that you've received by the $200, and then you end up with rental income as well. Okay? Again, don't worry too much about it. It'll make more sense when we are in the worksheet. This is the worksheet. So when we're looking at the worksheet, we're going to be able to, remember, we're going to go back and we're going to be looking at the trial balance. Remember, we have our trial balance, then we have the adjustments, then we have the adjusting trial balance, then we can go to the income statement, and then from the income statement, you go to what? After the income statement, you go to owner's equity, and then you also go ahead and end up with your, your balance sheet, your income statement, your balance sheet, your owner's equity. No, owner's equity is last. Your revenue, your income, so that you can put everything in. So again, you were looking at all of this. We'll see it on the worksheet. And remember, we're going to get the totals from the first four columns. We're going to fill out the income statement from the adjusted trial balance. Here we go. Then we're going to go ahead and go to the balance sheet from the adjusted trial balance as well. So we're going to enter the trial balance, all of this information. Let me make sure that you guys can see this. So let me make it bigger for you. If I can, okay? So you're going to see this as actually going ahead and being the information that you need to see here. So we're looking at, of course, again, the trial balance. We're looking at all of the information that is here. And we're looking at how well we can see all of this that's here. Notice we've got cash. We've got accounts receivable. I hope you can see this better. We've got, again, our depreciation for store equipment. We have our notice, again, we're bringing everything in that we've worked on before, which is your accounts payable, your wages, your SUTA, your FUTA, if you've got them, remember that. I know we were off for a week and barely remembering everything as we're starting up again. The withdrawals, income summary, sales, returns, purchase and discount and allowances. This, we're putting all of this now together, the freight, the salaries, everything that we're bringing in. This is just a trial balance. Then, of course, we're coming into now the chart of accounts. This is what they have, which is based off of, again, you'll see in the trial balance, all of these right here, all of these accounts noted are here as well. Okay, so we're going to see then the, let me bring this back out, the rental agreement, or the rental income again that was earned. Now $200 has been earned. So what we're doing is we go ahead, unearned rent, we debit the unearned rent, right? And then we credit the rental income, reducing the amount of money that we have again for the unearned rent that they paid us for in advance, and adding it to the rental income that we're going to be putting it in for this month. Okay. Remember this, supplies on hand. Again, what your beginning amount is for supplies. Then, of course, you're adjusted because now you have a balance. Whatever we have on hand, this is how much we use. And remember, you debit first your supplies expense of how much we used, and you credit your supplies to get your now adjusted balance. Same thing with insurance that has expired. What you have, you debit your insurance expense, you credit your insurance, prepaid insurance expense, then you look at your adjusted trial balance that you've got there. Remember depreciation. Depreciation is decreasing the value of equipment that we've got. And remember that the historical value stays and remains the same. We're just going ahead and showing how much we're depreciating that equipment because of use per month. Okay? So we would debit the depreciation expense and credit the accumulated depreciation. And notice how this increase. The reason it increases is because we're deciding how much we're going to depreciate. And once we've reached that total of depreciation, then we're going to stop. We're not going to be using this anymore. And it's not going to be something that we can use as against the asset that we have. Remember, this is a contra asset account. Adjusting the salaries. Maybe we left something out that we need to put in. Remember, we put them in wages payable or salaries payable. If we're going to pay them in the future, we debit the expense, we credit the salaries payable, and we show how much we've paid, okay, and the liabilities. So again, here is where we go ahead and we show the adjustments. And notice, here we have, again, what we have on hand. We have only 4,000 in it, that we started with 19,000. We debit the amount that we've got. We have the credit. So adjusted trial balance again is how much we've actually ended up with. So we know that we've used what? We've actually used up 15,000. Okay. Then here, unearned rent. Here it is. We go ahead and we show the unearned rent that we've got right here. We go ahead and we show it, and then we credit it, and we end up with only the balance of 4,000. Notice this right here, A and B. Here we go. We're going to be showing this income summary. So we show the 19,000. We show what we've got, base that of what we have, and then we go ahead and show again what our current balance is, what we have. In our supplies expense, notice we debit the supplies expense, and then we do what? We bring it over, but we debit the supplies expense, and then we credit. If we look at this, D, we credit what? Where is it? D. We had it here a little bit. Supplies expense. Your instructor is going blind. She can't see this anymore. D, and of course we go ahead and we debit and we credit it to bring over the adjustment as far as how much we have now on stock, okay, on our supplies. Here we go, D, it's not in blue. Why wouldn't they put this in blue if this is in blue? I don't understand this. It's okay. We're all right. I'm not, if anything, comical. So here we go. We debit your supplies expense, and then we go ahead and we credit it, showing how much we have left over, which is just the 300. This should be in blue. That's why we can't see it. Okay? Insurance expense, here it is. We debit the insurance expense. We go up to prepaid insurance, again leaving us with the amount of money that we have, or the balance that we have going forward. That's what we're looking at, everything. Notice again the depreciation expense of the $50 that's here. Then we go ahead and we look at the accumulated, and all we're going to do is credit it, and we add it on. Okay? Don't worry, I'm going to do a demonstration of this with you as we go through one of the homework assignments. Okay? So we're going to fill out then the income statement. And remember, what the income statement is, all we're looking with an income statement is what? Just the income of the money that we made, our sales. Then we're also going to be looking at the sales and returns and allowances and the discounts, our purchases discounts, our freight in. And remember, because it's our money that we made plus the what? Well, minus all of the expenses. Then we come to, the reason we put in the rental income is again because that is income, our supplies expense, insurance expense. So we're going to go ahead and again take everything that we've gotten, all the money, so that we can show what our net income is. And if we add the net income to what we have as the balance here, we come back out with both balancing as far as how much money we've made. And remember, that's all the income statement is. How much money we brought in, how much we have, and then how much we've made, how many sales we've got. We have to minus the returns and allowances because that goes against, that's our cost that we're subtracting from the money that we could have made on the purchases and all, of course, on the sales discount. And we're adding, of course, the expenses of the freight, the salaries, payroll, postage, miscellaneous, interest expense, supplies, insurance, the depreciation, so that we can come up to what our net income is, right? Then we fill out the balance sheet. And remember, the balance sheet is what? The other side of the formula. Okay, we have our assets and we have our liabilities. We have our owner's equity as well. That's what it is. So it goes ahead. Notice 13,745 is what we're missing. It's added to the credit column so we can balance out. Okay. This is what it looks like when we've got the completed worksheet with everything that is there that we're working with. Okay. And I know I've got it zoomed in a little bit, so you might not be able to see all of it. So this is what we're going to be doing. All right. So again, don't get bent out of shape. We're going to go ahead and do this together with an actual demonstration so that we can make sure that you're going to be okay for working out the homework and being able to um, uh, make sure that you can go ahead and complete all the assignments that are here for this chapter. All right? And again, if you have any questions, don't hesitate to contact me. I'll see you on the flip side.